Good morning, everyone. Welcome to another episode of the show, Wealth Clinic. And of course, in our usual manner, we're going to start off with the stock market review, the losers and gainers of yesterday, top five. And we talk about some earnings report, half year reports from some companies that came into the market during the week. And then we'll have a chat with the newly elected president of the Charter Stockbrokers, Mr. Omalegbe, on how to actually move the market forward. All of this after the break. We'll be right back. Welcome back. Of course, I have Bruce in the studio with me. Bruce, how are you?
I'm very
Hope you
fine.
didn't miss me too much last week.
I did, but thank God you are back.
It's good to be back. It's good to
Yeah.
have you here too. All right, let's get into it. Top gainers and losers of yesterday. And we've got Linkage Assurance topping the gainers chart. When I saw it, I was like, really? Okay, it's good to see new kids on the block topping, right? Once in a while.
Exactly.
Yeah, Linkage, we've got Vitafoam, we have Rio Exchange, Unity Bank, Transcorp. You know, I said something about Unity Bank that in as much as their shareholders fund is negative, we still see people that want to play in and out.
Yeah, traders.
So I'm guessing, yeah, you guys, right?
Yeah, traders will only do that. When it's opportunity. Like when you do your technical analysis, you see your support level. You know, you can enter, you go up again, touch somewhere, you sell off. But for those that are taking dividends, should not look that way. Should not look that way.
Dividend.
Yeah,
Okay, then of course we have Transcorp also on that list. Then losers chart, we had the Eternal Oil, 10% down, full 10% down. Prestige Assurance, well, we're used to Prestige being on the gainers side, but I guess it's profit taking.
Exactly.
That is getting them there. Then we have Interbrew and Cornerstone and CAPL. All leading the losers charts. Okay, so anything particular about these outside the fact that people, the companies that we're used to seeing on this side, are on this side? Anything relating to this that we need to know?
If you look at the stocks, the top gainers, they are all penny stock. Apart from apart from Vitafoam, that's about ₦5, 75 Kobo. That's the only stock that I know is let's say it's still penny, but one of the stock that you can say is a big medium-term stock. All of them are low-cap stock. But I'll tell you that the gainers is reflecting what is happening in the market. See, the big boys or the medium and the high-cap stocks are not there now. Investors are waiting for them to come to a price they will start jumping in, expecting that their second quarter result or half-year result will not look as beautiful as people are expecting. But I'm also sensing that because we're expecting this result, and people think that it's not good, they've started factoring the price into the price of these stocks. That means when the results finally come, the reaction may not be as bad as expected. But investors are being careful, seeing the stock coming down, especially those that want to take advantage of those that are going to pay trade dividend. They want a place that they can buy at a good low price so that their yield can be a bit better, and they start holding the end of the year. We're already in the 7th month of the year. That means if you are taking your interim for the month of August, September, you have no less than 6 months again to take another full year. They can excite patient, so that they can have a good return from such stock. That's why investors are being careful, watching. But I don't. When the results start coming, but the results that hit the markets of recent, you can see that there's misperformance in some of them. Let's expect that the result to give direction. And also considering that the outcome of CBN meeting or the MPC meeting, also investors are still taking time to analyze it. How it's going to impact the economy positively. Liquidity are coming. Where is it going? Because the first liquidity we saw in the market that drove the market from April to around May or June was liquidity that foreign investors that sold down came back to the market, and that was direct. But now that government is injecting funds into the economy, is it going to equity market, is it going to investment, or is it going for just for the resetters? These are the kind of people are going to, let's see how this government bailout is going to impact those sectors and start producing good results, activities start increasing, then the stock that are listed will also start enjoying, because when we are having activities, we are posting results, the price will go up because we are seeing the hand. That's why investors are taking time to analyze which side should they go now, which sector should they go now. That's why I see there a lot of slowdown, calmness in the market. Despite that, I can see that they look after the one going up.
Interesting. Okay, let's go into the earnings results. First on the list, Jay's Bank. Oh, fantastic result, really fantastic result. If you look at half year against 2019 against half year 2020, we see that they actually grew. I mean, gross income then was 5.75 billion. 2020, 8.01 billion, and that's like 39.3%. And profit after tax also went up. Now my question, and I asked you this before we came on here, is it peculiar to the banking sector or is it peculiar to JA's Bank because of the way they actually run their operations?
I would say, let's say the way they run the operation one. But if you look at the first quarter performance of all the banks, Jais one of the bank, so Jais performance was also different from the first quarter. Other banking stocks, most of them were flat results. They were not in decline, they're not in red, but most of their earnings was flat. And apart from UBA and Access and what's it called, Women Bank. But if you look at Jai's number now, this second quarter, you can see that all the criteria of equality earnings have been shown. One, they have grown their top line with more than 20%, which is expected. Also, the profit after tax, which is the profitability level, is also up more than 15%. That is that this company is heading somewhere. But the funny thing is that going through the result, this was a bank that made provision from almost 294 million to about 926 million provision for expected bad loan and other stuff. Still, the result is fantastic. And if you look at that first quarter result for other banks that made provision for such provision in their result, the result was a bit low because they made provision for this non-performing loan. And that is why people are still careful that banks' result will not look attractive because the economy is dragging feet. Bank being the engine room of any economy, and they want to lend money to these activities. Now that the activities of those companies or businessmen is not as bullish as expected, because paying back their loans will affect the bank's bottom line. And also CBN is compulsory for the bank that you must make provision for expect not even though they have not gone bad. For the expected that that is going to go bad, make provision for it. And when you are making provision for such bad loans, it's going to affect your profit. And that's why people are saying that their banks are likely to cut profit in this year. I said, fine, it's possible, but not in this interim that they are paying a bit kobo dividend. Fine, if they are likely to do that, that will be towards the end of the year for 2020 financial year. But I know that many banks in Nigeria has good retained earnings and they have good balance sheet. They might try to say, let's do dividend equalization policy that they've been doing before. We might not increase it, but let's pay whatever. But I know as their prices are low, I think there are some banks that are attractive. And I think that I sent something out on Monday that if you want to know those banks that you take position now, I said that if you log in, you see them so that you can take advantage of the low price of this stock. But they already are their what we call buy point or buy range that you can don't jump in. And the good thing is that those are going to pay 3 dividend. The result will come out from August. Then because Jais is not a dividend paying bank, and also Jais has done one thing again, to be one of the early filer in the market, not only that from financial sector. Before they come even towards the end, but now, like also tell people again, I will say it again that when the child, in a school, comes first in the class, when the dad is coming from the gate, the child is always moving that report card. And I've noticed that also in this market, when the company is doing well, it will let you. Yeah, it comes quickly. But when the company is doing badly, it wait till that the 30th day to close the results to come, so that you have seen the bad ones, that you don't have time to look at him and say this.
Okay, so Jais Bank, how is their payment? I mean, their dividend payment culture?
No, that is just. It's just setting what happened now is just setting a president for himself or bringing out to show history for himself. He just started dividend last year, 2019, with 3 kobo dividend, the first time since they listed. And they listed just about 2 years ago. It's the new bank. And it just started with 3 kobo. With the result we're seeing, Jais can sustain that 3 kobo, even to 4 kobo. And that means for people that are thinking long, I said it on this program, if you remember about 2 weeks ago, that if you don't have much money and you want to save with stock, that's a stock that you know that they have potential of paying you dividend. And that you can start saying, and this one is small price, you can still find,
how much is it now?
Jais around 55 to 56 kobo. And they pay dividend of 3 kobo when their price was around 70 kobo. Now when they mark down, came down, and the results we are seeing, the first quarter was positive, second quarter positive. Likewise, the third quarter will look like, because at the end of this second quarter now, we already already projecting how the full year will go. For investors that want to position for a full year, you might be doing other thing, or you can, if you're a long-term investor, you can just jump in. But for traders, there's no time to jump into Jais. But let's for this earnings news, you can buy. But for investors, you can take advantage of this low price at 55 kobo. Buy. Then when it moves to 80 kobo or even 1 naira, and they are paying dividend at the end of the year, because the way it's going, they are going to pay dividend at the end of the financial year. I'm telling you. Because
the way you sound like you're part of the board of
no,
directors.
No,
I might not be going to pay dividend. Or you just have trust in them that they're just going to pay.
You know, when, like for example, now, okay, I think we're going to discuss other earnings. When you see a company number, it gives you insight what is likely to occur. And also now they started setting a precedent for themselves, try to input, tell investors that we are here for you, for putting faith in us, for having confidence in us. They rewarded you for 2019, and the numbers are still becoming better.
Ambrose, look at this number. Assuming I take away Jaiz Bank and I maybe put a Zenith or a GTB, I'm not looking at the absolute number, I'm looking at the percentage increase. This is the kind of results that will probably run GTB or Zenith, I mean the toast of the market when it comes to banking sector, from 2 naira to 50 something naira.
Yeah.
I mean, you will see the impact.
Yeah.
I'm just wondering, why are we not seeing this impact in price change for Jaiz Bank? These are people don't really know about the bank, or because the price is so small. We know that. I don't know if foreign investors, portfolio managers, you know, they have the list of stocks that they actually invest in. And a lot of them, most of them will not invest in stocks that have not paid dividend for 5 years.
Agree with you.
And we know that bulk of trade actually done by foreign investors. So maybe we are not seeing the hands of foreign investors here yet. That's why we are not seeing the price move. So maybe we should give them 4 years when they've consistently paid dividend.
It's possible. And also, another thing is that the price is very small. Any foreign fund that will come to this stock will move it up.
Buy it everything up.
When you are coming in, when you are going at it, it's just gone down. I think they should also stabilize, they move. And that is why I see all these hedge funds, they don't enter small stocks because they are the one moving. But if a stock that has a good capitalization, that has good share in issue, you can buy those stocks like all those business bank you mentioned. If you're foreign, because even though they are there, price can only move, but they can still make profit on the board. If you are the one entering this kind of stock, you are the board. For those that are retail investors that are planning for long term, they can start looking, because the bank is gradually telling you where they are going.
Okay. Now, we can see that maybe based on, I said it probably based on the way they run their business, it's not about interest on loan, is about profit on business. So maybe that's what is accounting for these beautiful results, right? Do you think that the other commercial banks can also maybe create like a division that will cater for just that? I mean, if everybody is making money,
like a portfolio that will be
that will just, you know what, we are not taking interest, we are just going to share out of the profit. Do you think other commercial banks actually think in this line?
It's possible, because the banks are there to create money. How the bank creates money? When we were in secondary school and university, we were taught that bank creates money to giving what? Loans. Now, if also by work can get money, if I'm giving you loan and I help you to supervise your business and you do better and will shape no profit, and that means the man borrowing money has no burden again. It is what we make, we share. You take your own. When you need your capital, you can also gradually. I think it's another business model that you can start looking at. I'm telling you that. I mean, I know that there are some countries in the world that most of their banks give interest free. They're like what they do. What they do that not interest free. They help you to manage. When you make profit, they share from it. You take. On that, it's another business model they can be considering.
That's interesting to know. Thank you very much, Ambrose. Over to Unilever half-year results. Okay, not good. 2019, they had, that's half year, they had 42.56 billion turnover, and half year 2020, they're having 27.34%. Not impressive at all. Then comparing the turnover to the profit after tax actually went to negative 519 million negative, like the whole billion just wiped off and we all saw ourselves in the red. What happened? I mean, Unilever, that's consumer goods sector. Yeah, we know that people are really not buying so much, but the reduction in, turnover, is that what is actually, because we can see that, turnover wasn't so impressive compared to last year, but then what could have actually accounted for the negative profit after tax?
You can see the drop in the top line. When you are not entering new markets, even the market you have before, you are not able to make money, because when a company grow their top line, doesn't matter if they're entering new market, they're expanding, but now you have expanded before, you cannot even service the market you have already. Something is wrong somewhere. Like as you just said, being a consumer company, the purchasing power of many Nigerians are low, and many of their goods might be on the shelf there. And also, we learned that the business model we were operating before now put them to a lot of, most of their distributors were not paying back after they give them on credit. All the kind of things are affected. Also, if For example, you have like 20 or 20 distributors that you are believing for, and all of them are distributing your products all over the country. And now, because they are not paying, you have 5. You know that definitely that 5 won't service all the whole place. It's part of what will affect them, but I know that they are looking at it. But for me, I would say that investor in Unilever should really just stay patient. But if you're a trader, you need to jump out immediately. But for those that I want to hold stock like wife, for me, I would have sold off my Unilever by now, waiting until it touch like 6 naira again, or 5 naira, or 5 come back. And then we start seeing whether they are finding their feet now, they're trying to find direction. You cannot jump in, but these numbers are giving you a signal that you should expect nothing from this company for this year. No matter what they do between now and end of the year, you can't change this thing. Even when you change to positive, they would like to also have reserve before they can want to pay you anything. Yes, they can't, if they dip into their reserve to pay, yet what they have reserve, it's not telling good of them.
That's interesting, and you wonder why companies like that are not expanding into new products. Now, we made mention of Nestle before we came on here, and the fact that Nestle has products for everybody. As in, before you think about it, they've created it. Like, so if one is not selling one, we sell. If you are so angry at Nestle, what do you want to buy? Because they're virtually into every market.
Yeah.
The water, what is it? Young, old, babies, infants, whatever, they have everything. Then you begin to wonder, why are all these other companies in the same sectors not taking the cue from them? Look at Cadbury, for instance, being on Bonvita since maybe before I was born. TomTom, I was saying that, is TomTom still in the market? I rarely see that. Not because it's not there, but because there's so many other sweets there that is crowding it out. We're not seeing them. And when we cannot see, how do we buy? And when we cannot buy, how do you make money? And you are the big boys in the market. You are the ones that have funds that you're servicing loans, you know. So why are they not taking cue from these people? Is that they don't have enough money, they don't have retained earnings, or what exactly is wrong? Or it's just company policy that, hey, these are just the 2 things we're going to do. We're not going to expand.
You know, let's just look at that industry you just said now. You know, anywhere in the world, thank God, so this company they have foreign investors in them, in Nigeria, in Unilever, in Cadbury, and in Nestle. Let's do these old names there. And you know, anywhere in the world, your research and development department is key. It's how much you input in that department to show you what you are having. And then if they are really investing, they think outside the box that we should increase that. You just mentioned that multiple product line for Nestle, and it's paying off for them. If you look at their first quarter results, it's almost a flat result, even when the economy was bad. Even this was like, for that, I think they should start. Look at stock like Cadbury, for example, as you just mentioned. It's a company that just has only 2 or 3 product line. And in 2009, 2009, 2010, 2011, when they did the right issue, they have excess of about 9 billion, and they return this money back to investors. Back to them. It doesn't mean that they are not thinking. If you are thinking, you should invest in another thing. Today, the water contribute to Nestle bottom line is huge, because they diversify. They didn't leave it for Coca-Cola. You know, Coca-Cola have been in water for a long time. They say because Coca-Cola is there, let's just you have your own market. This is how you package your things. People know this water is there. Everybody need water for that. And you know that this part of the world, one thing is important. People give a lot of respect. It's important. It's important. And these are that credible as Cadbury. You know that yes, you have foreign input, foreign management involved. No, but for me, is that they are not thinking. That is why, because the way they are performing in the market, you know that they are struggling. If not that, what's it called? Unilever now, they say they change their business model and all those things. Unilever have been a defensive stock for a long time. Because of recent, they were seeing Unilever, giving us this kind of number.
Results. Okay, thank you, Ambrose. Over to United Capital. Okay, United Capital, what do they do first? Half-year results? Not that I don't know, but United Capital, from the name, people might be wondering, what do they do? Although their results was beautiful, but United Capital, what do they do?
They are like investment banking. No, they do investment banking. They invest, they trade in stocks, they do in board, they pre-board. But what really impressed me about the result, I will tell you, like Joe mentioned, that the result is good. The result is good. We don't need to, if you see the numbers, you know that the numbers are good. But the good thing is that this company took advantage of the market when the market was down. Being a player at capital market, in bond market, within this period, you're able to raise funds about 100 billion bond. Not apart from that, they took advantage of the market. When you have such money, you took advantage of the market that was down, almost 11 years ago in March. You take advantage and you enter with fund. This thing will give you good money. If they didn't report the good, they will ask their question. They can see that. You can see what was it. But the good thing is that for those that are income investors, those should start looking the way of that stock now. You know why? This is a stock that has 27 kobo half year in 2019. Now they're having 32 kobo. They factor in even the bond in the result before they get the 32 kobo. On that note, that company is capable of paying you what they did in 2019. Because they pay 50 kobo in 2019. Even though they cut their dividend to 40 kobo. I mean, I'm buying around 3 naira or even 2 naira kobo for long term. That is more than 20% now.
How much is it now?
It's around 2 naira 75 kobo. And if a company that paid you 50 kobo dividend for 2019, even they cut their dividend to 40 kobo, I mean, you're buying at 3 naira, you are still at, you're more than 15%. Which of the investment window in Nigeria will give you 15% in a year?
Treasury bills before.
You said
before.
You said what?
Before.
You said before. Interest rate environment now is even hitting.
It's like savings accounts.
It's not hitting both fund managers and everybody's confused because in Nigeria, a fund manager before now sit down in the office. Every money for invest, they push it to treasury. But now when you bring money, they think where to put it. And also, inflation is also rubbishing a lot of investment windows to speak now, and that is why, for me, if you really want to hedge against inflation, there are some companies that when they increase the product or price of their product or their services, people will still patronize them. That means when patronize, they will still have good earnings. Will put their price up. That means if you want to hedge against inflation, you don't need to be running because every investment one is to make capital appreciation and preserve your capital. These are the two things. As I make capital appreciation, let me preserve the one I have so that it will become meaningful. Then you should look for good equities and take advantage of the market. Because I tell you that one of the best way, I only repeat it, to grow your wealth is the equity market. I didn't say it's only, but one of the best way, I mean, because you can even look at it. One is to up your knowledge up. Increase your knowledge in the equity market. Check it up so that you can take advantage of what we are seeing. You can look at your portfolio. This one is for my long term. This one for my short term. You do it very well. You're making money for yourself. It's just the part of the world I want to sit down. People are saying I'm not making money. Learn, you make money.
I like you, Bruce. All right, let's talk about, of course, still the Wealth Clinic show, and now we want to talk about some stocks that actually pay half-year dividend, interim dividend. Most stocks, not all of them, most stocks that they pay year-end, but some stocks actually pay half-year. So they give you some money half of the year, of course, their financial year, and then give you some ending of the year. And I think the rationale behind that is for people that are banking really on those incomes. So you don't have to wait till ending of a year to get money, so you can get something ending the middle of the year. Seplat is not quarterly, they do?
They do quarterly, yeah.
So Seplat actually pays you dividend every 3 months, just for you to have something instead of waiting till end of the year. So we want to talk about some of those stocks that actually pay half-year dividend. And topping the chart is Access Bank, because that's the one that has the highest yield. Now we're looking at historical information. That's 2019.
Yeah, payment.
And a lot of times you can't use historical to actually predict the future, but you have to use a base though to to make analysis. So for the sake of analysis, we're using 2019 dividend payment yield, and Access Bank actually topped the list. They had 4.03 yield just for interim dividend, meaning that if you had bought it and you compare the interim dividend paid as a percentage of how much you bought it, right? The date, I mean the price as of the day they actually paid the dividend, what you'll be gaining is within the range of 4.03%. They had the highest Seplat followed, and we have Access Bank, Seplat, we've got Stanbic IBTC, UBA, Airtel, MTN, Nestle, Custodian, Zenith, AXA Mansard, and Nigerian Breweries, and of course we've got Guaranty Trust Bank. Now, some of these companies have been paying dividends for over 5 years. We're talking about the banking sectors they've been paying, and Custodian, and also AXA Mansard, they've been paying for a while. The new kids on the block, though, we've got Airtel, and we've got MTN, and Seplat was just about 3 years ago. Now, based on consistency, we can say that the banking sector, we can rest that they will still pay this year. Right?
Yes,
they will. A lot of them always want to follow. They always want to be consistent.
Yeah.
If not for anything, for the sake of their foreign investors, they want to be consistent. They don't want to pay this year and not pay next year, and So even if they are not making that, they will find a way of paying, so that they will be consistent.
Yeah.
They won't fall off that list. Right. But looking at Airtel, MTN, I mean, just a year that they've done it.
Yeah.
Should we still expect this year?
Yeah, why we're expecting this year, as you just said, is because the economy or the situation, the right over the world is favoring the telecoms company, and that means you don't have reason to say you are not paying.
Actually, you don't have a choice than to call or use data, so they shouldn't have a choice.
Even we were expecting it to grow even the interim dividend because they paid about 2.95 kobo for FTA. They should make it like 4 naira now because we are collecting big money already. Because I'll tell you, since this pandemic started, school have been online. I know, like data I paid for a month for my daughter for a month. I'm surprised that under 16 days. A month data is off. I have to pay. That means if other parents are consuming data now like this, it tells you that they are making money on that. For me, I expect them to even grow their dividend. That's why if you are following us, I told them earlier before around that March that you should start rearranging your portfolio, diversify your portfolio, area that you should be, because as we go into the year, you see things happening. They are unfolding already. But for the bank, as you just mentioned, I think you said right, very, very correct that they are consistent for almost more than 5 years paying this interim dividend. No, the good thing is there for the bank that the report that CBN were discussing after their MPC meeting, that even the banks, they were saying that their non-performing loan will be on the rise. We are hearing that even during this pandemic, they is even dropping from about 11% 2019 to about 6.4. If you compare it, that is a good performance. If their non-performing is not on the upside, that means our banks, risk management has improved. And he said that our banks have no problem. Their banks are intact. That means we have good banks that are robust to do everything, good robust balance sheet and all those stuff. That means this bank can afford to pay this kobo dividend at this interim. Especially the MTA, GTB, Zenith Bank, Access, UBA, we expect them to, and Stanbic, to maintain this there, because also if you look at their position in terms of first quarter, we're not seeing their second quarter result, their half year results, they have what to do to pay because they are not paying much at this. If they want to cut, it should be at the end of the of the year. But for me, if you look at that dividend yield, as you just said, we are comparing what they paid in 2019. If the Access Bank maintained their 25 kobo and is trading between 6 naira 10 kobo and 6.20, you are going to get a yield. If you buy now, your yield, if they pay that 25 kobo, is around 4.05 or 4.03, and that is higher than even a whole year yield for Treasury bill. Treasury bill is a range of 2.2 to 2.8, for a whole year. Why? You are thinking, you're spend up to 3 weeks in this stock, you are making such yield. I see that, investing properly should start looking down and look at some things. You can take action than waiting for one investment window because you don't want to take risk. If you want to take risk, take a calculated risk and you know what you are buying. If you look at stock like Stanbic that is selling around 29 naira to 30 naira, and it's going to pay if they maintain their interim dividend of 4 naira. That will give you almost like 3.4% yield, which is also above the Treasury bill. So look at that of UBA. The same thing. Look at that of Steplat. Steplat is that there's some reserve there because the oil market is struggling. They might say not, because if you look at their first quarter result was not too good. They might have had on that, they might not pay the board. We are giving you statistics of those that pay the interim dividend. But for the banks, I'm telling you, the way it's going, all the banks are likely, but only we are not there. But with the point that we are saying now, they are likely to pay the interim. If they want to cut anything, it should be at the end of their year. For me, investors should look at that way and start taking position in this bank. And these banks, I'll tell you, most of them are even selling at a discount. Look at their book value. That means most of them are on their value. And when you are buying on their value stock, your margin of safety is high.
Thank you, Ambrose. Looking at that last year, Airtel paid 9 naira 20 kobo, MTN paid 2 naira 95 kobo. Okay, I'm just wondering why one is paying almost like 4 times the other. Is it because shareholder units shares in issue? Yeah. Who has more, Airtel or MTN?
MTN has more.
Okay, so maybe that's why it's hard for it to go around.
And also because Airtel to also pay in dollar. Because Airtel is Airtel Africa. Why is you have MTN Nigeria?
You see, I was telling you, maybe that's why some people, maybe that's why the price of Airtel is high.
No, but you know that if you are in MTN, you see a lot of volatility to make money. It's not because of the last dividend, because they did their AGM within this month now. That's why Airtel moved from the price that been for like almost 6 months up now. And also, don't expect them to pay the interim dividend for this, their first quarter. The end of their year is March. The financial year end is March. They are going to release first quarter. If you're expecting interim dividend should come around end of September. And then people should take advantage of the MTN.
Okay. I know you like MTN for reasons best known to you.
No,
Maybe,
no, no, no.
maybe you like yellow or something.
No, it's not for them. It's not the investment opportunity. If I want to wait to take that in September, end of September, why me take the one that I know that is coming now? Because we're already waiting for MTN. Because the end of half year is up. Result waiting in the market. Just buying at this price. And also, it's still within the invest data buy range. Our buy rate is between 15 to 22, 115 to 122 naira. If you can get MTN at this price and exit at around 35, it's not okay. Work for you. You are good to go.
Okay. Thanks, Ambrose. I know that many of this, let's say, all of them, they are good stocks.
Yeah, go ahead.
Let's leave interim dividend
Yeah.
aside. But, when we saw AXA Massad results, it wasn't so fantastic, right? But, and we know that when it comes to investing, is that you're making money from capital appreciation
Yes. Oh, yeah.
plus dividend, right? So, given this interim dividend, is there enough reason to enter a stock like Mansard? Even though, because the people, investors might enter at this price and it will still be the same price all through the year, so there's no volatility,
Yes.
so there's no capital appreciation, and the only thing they have is
The dividend.
just the dividend. Do you think just the dividend is worth being in a stock like, let's say, Mansard? I'm saying Mansard custodian because it's insurance,
Yeah.
and I'm saying that because banking sectors, usually they are very volatile, so
Yeah.
it's pretty
No,
difficult for you to start and end the same
yeah,
price.
For Mansard, like we're expecting that the economic situation will affect, into premium payment for a lot of, insurance holder or one of their, what they call it, insurance holder. And, if then, on that note, they might not pay as high as 3 kobo they did, that they might have to come with 2 kobo at this time. Just to investor will understand.
Will it be worth it from an investor's angle? I'm talking about
No, I'm
general
now.
positive gain.
Everybody in the market has different investment objective. Some are in the market, okay, let me just be where I can have consistent dividend and my money is preserved and I see some volatility. Like we just said, stock like this Mansard, if you look at their shareholding structure, it's tight, but foreign investor is there. And you don't see that stock moving as others, but you see other stocks that are volatile. If you know that stock like what's it called, ICO, that you want to move, you can move to, all depends on your investment goal. What we're just giving you just the statistics, this is what happened for so period. If you want to take advantage of the low price now, this is what we're expecting if you buy at this current price.
Thank you, Ambrose. We go on a short break, and when we return, we have a chat with the newly elected president of the Chartered Institute of Stockbroker, Mr. Tunde Amolegbe, after the break. Welcome back. It's still the West Connect Show, and we have Mr. Tunde Amolegbe on the phone line with us, for him to talk to us about what we should expect in this new dispensation, all in a bid to move the stock market forward. So we have him on the line. Hello. Hello.
Good morning.
Good morning, sir.
Glad to be here.
It's good to have you on board. Congratulations, sir.
Thank you so much.
Okay. Thanks for joining us on this show. Okay, so we just want to find out some things, or rather, we just want to chat about some things. Being the newly elected president of the Chartered Institute of Stockbroker, what kind of agenda do you have in place for the market and also for the operators?
The CIS is an organization that has a strategic plan that we've been implementing for a while. And for me, as the new president, I'm going to just go ahead to implement that. So we have quite a bit of programs regarding training of our members, extensive education, extensive advocacy, which will be ramping up in this new tenure. And we hope that that will lift the fortunes of our members and also lift the fortune of the markets. Our advocacy efforts are quite extensive. We expect to do more regarding that. We just established a standing advocacy committee, so they headed by a former acting DG of SEC, who are going to be doing a lot of advocacy as to the good things we expect to come to the market. We want to talk about taxation in the market. We feel that if the taxations are streamlined and limited double taxation happening, that will help to, improve investment inflow into the market. And, we also will talk about issues regarding unclaimed dividend. What can we do as a group to reduce that phenomenon? And, a few other advocacy steps we are going to take. So basically try to direct government's efforts in raising finance for infrastructural development. We all know infrastructure is a major issue in Nigeria, and we believe strongly that the government can efficiently raise money to develop infrastructure more from the capital market rather than other sources. And if the government directs its effort towards raising finance, long-term finance through the capital market for infrastructure, the economy at large will benefit from that, and more securities, more tradable securities will come into the market, and the market will also benefit from that.
All right, thank you very much. It looks like there are a lot of things that you and your, it's not a one-man job anyway, have in place for us. But let's look at it from the point of view of investing public. A lot of people really don't understand how the market works. When some people hear about stock, it just looks like rocket science to them. And we know that it's not just the operators or the people doing the Chinese stockbrokers exams that actually the investing public. The investing public, they are much more than the operators and the stockbrokers. So what plan does the Institute have to actually educate the general public? Now, I'm talking of the general public on the road, the people with 50,000, 100,000, 1 million naira to invest, and they need to understand what it is. They understand what savings account is. They understand what it is to go to the bank and open an account. They understand how to get a loan. But what do they do? What is the Institute doing to actually educate these normal people? When I say normal, the Adas, the Adamos, the Shades on the streets that are not professionally savvy in stock markets and terms and terminology. What do you have in plans to actually educate them, to actually bring them to actually come to the market to invest?
Firstly, I must say this.
Yes, I am, sir.
Firstly, I must say this. When we say a stockbroker, we are talking of a multidimensional individual. Stockbrokers are not just equity traders on the floor of the stock exchange. On that same stock exchange, they are trading fixed income. They are trading other asset classes on that market.
Yes.
And those same stockbrokers are also trained to be investment managers, portfolio managers, research analysts, risk managers. So they are trained really in the whole gamut of the sphere that you refer to as financial intermediation. All right. So when a client approaches the stockbroker, our expectation is that it is not just to say, okay, the client, I want to buy so and so. No. You cannot assume that the client already knows what to buy and what to sell. We expect that your training as a portfolio manager and as an investment manager should kick in, and you have the client some specific questions that will elicit further discussions between them that will ultimately enable him to be able to say, okay, look, this is the sort of client you are, and this is the sort of investment you should be focusing on. All right, and if there's a need to actually organize training for their clients, either on the quarterly basis or half-year basis, We expect stockbrokers to do that. And I can tell you that quite a lot of stockbroking firms are already doing that. They organize, especially during this period of COVID. I know quite a handful of stockbrokers are organizing online trainings for their clients, informing them as to what the portfolio management processes are, how to mitigate the risk in their portfolio, and how to ensure that they get the best out of their investment. Of course, investment by its nature or market by their nature will always go up and down. The training and the education that we provide the clients is what will enable them know that, okay, look, when the market goes up, it's certainly not going to stay up forever. There will be factors that are out of their control that might make it come down. And they will be able to take a decision as to when to go in and when to exit. So, I mean, general training on the part of our individual members, I know it's going on. I know quite a lot of that is going on online. But brokers, part of the things we intend to also do is to actually collaborate with various shareholders associations, with the mind of, collaborating with them for additional training for shareholders and investors. So that is what we intend to do on a continuous basis in collaboration and in association with various shareholders groups.
Okay, thank you, sir. Okay, maybe I should put it this way. I know that charges of stockbrokers, I mean, I've known about accounting since I was in secondary school because there's a course called accounting. When you get to the university, you can actually study accounting as a course. You can study banking and finance. So right from that age, we already have an idea of what it is before we even went into the professional aspect of it. Is CIS planning on collaborating with the educational sector? I'm talking about maybe from the university point of view where people can actually study it as a course. And when we have a lot of people studying at that level, it becomes easy for them to want to do the exam. It's not when they finish school, they start thinking, what is stockbroking, what is CIS? Is there any plan to collaborate with schools to actually have it like a course as part of the curriculum? Is there any plan like that?
Excellent. Excellent. Key things we are already doing in the institute. I will tell you that presently we already have collaboration with 2 universities to offer master's degree in securities and investment. That is Mountain Tom University and Nasarawa State University. Those 2 universities have already started the pilot program of those master's degrees. Now, we are also at very advanced stage with various other universities with the mind of actually including securities and investment as part of the general studies that all new students coming into the university as freshers will take in their first year. All right? So, because what we are trying to do is just the way, in the first year, in your 100 level, you take a general study. So part of that general studies will be securities and investment training. So that any first year student going to any university, be you going into study engineering, they are going into study medicine, doesn't matter. You will take that course. So at least it gives you a basic knowledge of what securities are, what investment are. Because at the end of the day, anyway, by the time these students leave the school and they start working and they make money, they need to know how to manage their funds.
Exactly.
They need to know how to manage their investment. So we are working with that. So those are the 2 things that we are doing at the moment.
Thank you very much, sir. Thank you very much, sir, for clarifying that. At least there's hope in the pipeline. Are you still there, sir?
Bachelor's and master's program in securities and investment this year and next year, hopefully. But presently, we already have 2 universities offering those courses at master's level.
Okay. That is good. Thank you, sir. All right, let's talk about listing. There was during Soludo's time, companies were just listing. I mean, a lot of activities on the floor of the stock exchange, but everything seems to be quiet now when it comes to new listing. Is there any suggestion that you can give to actually attract more businesses to actually come on board and list? I know it might not be within the jurisdiction of CIS to do that, but what kind of advice would you give to actually encourage companies to list their businesses on the floor of the stock exchange?
I didn't get that, sorry.
I said that what kind of advice would you give to encourage businesses to list their companies on the floor of the Nigerian Stock Exchange? I mean, to encourage more listing, encourage more companies to actually come on board to list their businesses, because it seems we are not seeing new listing for a while. We've not been seeing new companies coming on board to list their companies on the floor of the Nigerian Stock Exchange. What kind of advice would you give to encourage companies to actually come on board to list their businesses on the floor of the Nigerian Stock Exchange?
Okay, thank you very much. It's very clear that, companies will look at the incentive to list first before deciding to list. They are not going to just do it because of, because it makes them look good alone. All right? Listing on the stock exchange clearly provides companies an avenue and an outlet to raise cheap funds, especially equity financing, that is relatively longer term and relatively cheaper. All right? So, I mean, that is in itself is enough incentive for companies to consider when they are considering their capital structure. All right, because if you as a company is looking to embark on a project with long-term gestation period, going to go and raise short-term money to do that will result in capital mismatch, and then you could actually struggle to meet up with the repayment terms of the short-term money you might have raised. But if you approach the stock exchange, you have an opportunity to issue bonds, you have an opportunity to issue equities that are more longer term and will give you an opportunity to actually raise the financing that is needed with long enough gestation period for you to be able to turn the project into a success. So really, that is the primary financial incentive that companies will have to come and list. Secondly, it is always good when you have a situation where, you have multiple shareholders in a company. Because multiple shareholders means that you have diverse opinions and diverse knowledge in running your firm. I mean, a company that is being run by one man, by two men, cannot get the advantage and the experience of having other shareholders come in, such that, when you hold AGMs or when you hold board meetings, they are able to bring the benefits of their knowledge to better your business for you. All right, so those are some of the incentives that companies should look at in deciding as to whether they need to come and list their securities or whether they shouldn't. And I think that more and more people are realizing that at the end of the day, listing is much better for them than remaining a private company at the end of the day.
All right. Thank you very much, sir. Thank you very much, sir. Congratulations once again, and I wish you good luck during your reign. Thanks for calling. Thanks.
Thank you so much.
All right, sir. Okay, so we have just a few minutes to go. Very few minutes to go. What do you think about what he said?
Yeah, actually, he has really, spoken the mind of many people, and also part really that area that I didn't touch, which I want to even touch now.
1 minute.
Yeah. One, the plan for them to take the education to university is a very good one. Mm-hmm. But do that on the street, because when you say CIS is more of professional. And when you're teaching a professional and you're teaching the man on the street, there are different strategies to teach them. That is why here, I think it will work on the regulator now, because they are institute producing professionals for the market. It's not done on the regulator, which is SEC and NSE, to plan how they should train Nigerians so that this over-dependent in foreign investor will reduce.
How do you think they should train them?
Fine. We have 6 political zones already in Nigeria. No, SEC and NSC can now, okay, schools, let's start from schools, or let's put that every quarter will have a training. There's always a way to put that, bring them together, you treat them, let them know how to set investment goal, strategy to buy and sell. We're not treating them like professionals that are going to do accounting, how to read, no. There are things that is important going to them. It's very few. You won't take them. As you do it, the more people interest are being what they can do. People that have lost money, that are sitting on the fence, when you tell that the market is has been transformed, there's a lot of transparency in the market, this is what's happening, this is how you can go so that you won't do the same mistake you did when you lost money. When they know this, you will trigger the interest to come. But when somebody is still nursing his wound because he lost money, nobody is telling him this how to do it. The person will still sit on the fence and be watching. And I want them to go just beyond the professional. Let them look at the people on the street, as you just said, the Adamus, the Adas, the Kechis, and the Alamide. All of them. Just look at them and just feed them. And once that is done, participation will reduce over time. Before you know it, we can now plan with our market. Why our market is always the way it goes, our people that up and down, is because when the foreign investors come, they take much of the market. And when they are going also, you understand. And also, because they are not part of us, anything they see that is strong in our market, they really want to move forward first. But if it's your own money and you are Nigerian invested, we know that we can correct it and we can still go. But we know that you are not in Nigeria. Oh, we don't know what they're going to do. First of all, you run with your money first. But if we are here, we are not running. If all of us are in the market and there's something happening, we know that the government will fix it or the company will fix it. For me, I think that they should expand the scope of education beyond the professionals. Let's take it to the street, take it to the communities, to the schools. And I think the regulators should sit up and spend money on that, because I know they may budget for their trainers. They should take it and let's touch the people's lives.
Thank you very much, Ambrose. Of course, this Ambrose Omodian, analyst from Invest Data Limited. I'm always saying PLC. Limited.
No, PLC is going to be there very soon, very soon, very soon.
Amolayemi Akwade. And of course, this show returns same time next week, Wednesday, and where we talk more about the markets. Thanks for watching us. Stay safe and have a blessed day. Goodbye.